What's going on, guys? Welcome to the weekly technicals video for August 5th, and we're gonna go ahead and get started with the dollar index as usual. Real quick, just go ahead and post in the chat box and let me know if you can hear me and also see my screen, and I will just continue assuming you guys can hear me and also see me, but just let me know in the chat box just to make sure everything's working properly. So looking at the dollar index, last week we pretty much stayed away from the markets because we had a lot of high impact news events. We had FOMC, NFP. We started a new month, so we're now in August. So we had a lot of factors last week that put us off in terms of any tradable setups. So looking at this week, looking at the upcoming news releases, we have Australian dollar Monday at 9:30 p.m. Pacific Standard Time. So that's a rate statement. So we can take a look at Australian dollar. I know we don't look at this too much, but we'll take a look at this on Monday. Tuesday we have another Australian dollar at 8 p.m. and 7th through the 10th. I guess this just means news for the next 3 days. But we have some dollar index news for New York session Wednesday. So this will probably be a good opportunity. Tuesday, Wednesday. Thursday, again, we have dollar index news, New York session, and Australian dollar. We got a lot of high impact Australian dollar news this week. 6:30 p.m. for this, and London session on Friday. A lot of GBP news, so there may be a potential trade setup on Friday as well, which doesn't happen often, but just considering that I don't really like trading Fridays too much, especially if it's an NFP, I'll never trade it. But in this case, there's no NFP or anything like that. So we'll take a look, and there may be a potential setup as well for Friday, or if we're still in a position from early on in the week, this news on London session 1:30 a.m. Pacific Standard Time could propel us into a further target level that we're looking for, so we could get that little extra bit of volatility right there at the end of the week. But we also have to anticipate a potential reversal, since this would be at the end of the week on a Friday. But again, we just have to see what the markets are telling us. But there may be a potential trade setup. Again, if we're holding from the beginning of the week, or just like a little day trade opportunity from London to New York session with this news that we've got here. So with all that being said, let's go ahead and we'll jump into the charts now. Looking at dollar index on a daily time frame, we can actually start out with a weekly. So looking at a weekly, last week we had a relatively bullish week, and to me it looks like we're going to be targeting this high here at the 95.65 level. They weren't able to to push this thing lower like we were expecting, because ultimately we were looking for a move below 93.70 and then 93.20 for the bearish scenario. And I said, if they don't continue below 93.70, then we have to anticipate a run on this high, which is 95.65. And that's the main reason I wanted to stay out last week, because we had so many news events. They could have done anything. So I wanted to wait, let them finish the week and show me where are they more likely to go. Now, looking at this a week later, looking at this weekly candle, it looks much more likely to go for this high, versus these lows down here, right? So there's, with us anticipating a potential bullish scenario for the week. So what does that mean? We're anticipating higher prices on the weekly chart. So if we look at the lower time frames, we're going to be looking for buying opportunities in the dollar index, which inversely to foreign currency, we'd be looking for sell setups, right? So the main reason that we wanted to let the week unfold is so we had a lot more clarity of what the market's going to do. So now that we have that understanding, and we're anticipating potential higher prices, we have to see where could the market trade into as a target, and where could the potential trade setup form. So looking at this market, we have these two down candles, which were validated here on Thursday's bullish run up. So August 2nd, Thursday, when the market pushed up like this, it closed above these two down candles, validating these two down candles as an ICT bullish order block on a daily time frame. So now this becomes daily support. Okay, so if the market pushes down into this high, which the high of this candle comes in at 94.91, or the open at 94.76, so 94.76 to 94.91, this market can trade into and find some support. I would like to see the 94.76 level be hit, and that be where they find support. So it could very well just come down to 94.91, find support here and trade higher. But if we trade back down into this 94.76, we would be touching the open of this daily ICT bullish order block, which in my opinion would provide more support than just the wick here. There's a lot more volume when you're working with the bodies of the candles versus just the wicks. So 94.76 is where I would like to see this market go. It could, so if we mark out this candle's open, so 94.76 to this candle's close, it comes in at 94.35. So 94.76, 94.35. 50% of that is 94.56. All right, 94.56. All right, now this level that we have here that we just put on our charts would be the absolute lowest that we would expect the market to go. So what this is it's ICT defines this as the mean threshold of an order block. So it's 50% of the order block, and that would be the absolute lowest that we would expect the market to go. So that level comes in at 94.56. So the market could, we anticipate it to find support at 94.76, but it could spike down into 94.56, hit this level, and then react off of that and push higher. So we don't necessarily know which one it's going to react off of going into it, but we have all of the levels on our charts, and we monitor price on lower time frames, whenever the market's open, and from there we're able to distinguish which level they're going to use. So we identify which level they're going to use by, on the lower time frames. Since this is all based off of a daily, we would want to drop down to like an hourly time frame, and we would want to see the market showing us bullish price action off of one of these levels, and that would indicate which one they're buying off of. So that bullish price action would just look like exactly right here. There would be a low, a high, a higher low, a higher high. So this is on a daily perspective, but you would be looking for the same piece of price action, like just a low, and then so there would be a low here, and then the market would push up, form a high, and then it would come back down and form a higher low, and then it would push up again and form a higher high. So you would be looking for that to form at one of these levels on the lower time frame, okay, on like the 1 hour time frame or even the 15-minute time frame. It's really based off of whichever one is clearer, right? And what I mean by clearer is just like that there's not a bunch of like wicks or anything like that. It's just relatively clean price action, just like how it is right here looking at this little portion. So just this little piece of price action is what you would want to see off of one of these levels: low, high, higher low, higher high. Okay, so if we drop down to a 4 hour, I marked out this 94.87 level. So what I did here is I drew my fib from this high to this low, and I'm not using this to measure out any form of like optimal trade entry or anything like that. Like I'm just using it to map out like where I'm at in the range, so of the market. So right here is 50% of the range. So basically what I mean is, the reason I like the 94.91 to 94.76 level is because it's relatively right around the middle of the range. So it is, a few pips, about 10 pips or so lower than the actual 50% level itself. But the fact that, these two levels are within that 50% price point, generally we want to see price stay above the 50% level to indicate further strength and that the market would want to continue higher. But if we get below the 50% level, most times that indicates that we want to trade lower. So it doesn't work every single time. That isn't always the case, but these are tools that you have to apply to your charts in order to kind of get a feel for what the market may do. So I put this 50% of the range level on my charts to basically indicate to me whenever the market gets down here, I want to see some level of support forming. Now with news, we could just get a quick little spike down into the 94.56, which is that the mean threshold of that daily ICT bullish order block, and that's okay if that happens. But generally what we would like to see is the bodies of the candles stay above 94.87. So we can have like a long wick or something like that comes down here and hits this level, which is totally fine. But generally we want to see the bodies stay above the 94.87. If that happens, and the bodies do stay above here or relatively close in this little area here between 94.76 and 94.91, that indicates that the market is respecting this 50% level of the range, so between this high and this low down here, and that would indicate to me that likely our next target would be 95.65, which is this old high back here, which and relating this to how we would trade it is this, whenever the market gets down here, the currency pairs that we're looking at, for example, if it's GBP USD, as this market here is trading down into support, we should see GBP USD trading into some level of resistance. And as long as dollar index proves to us that this support level is going to hold in this area here, then that would allow us to trust that trade, whether it be in GBP USD or Euro USD, so much more because of the fact that dollar index is trading into support, while at the same time the pair that we're looking to trade is trading into resistance. If the currency pair is a foreign currency before the dollar index. But if you're trading something like USD CAD, I mean, you guys should all know this by now, but if you're trading something like USD CAD, then that would be direct correlation to the dollar index, so they would move in sync with one another. So for example, if dollar index moves higher, we should see dollar CAD move higher. So it's all relative to the pair that you're trading. So if we're looking at dollar CAD, for example, and dollar index is down here at support and we're expecting it to find support and trade higher, then at that same point in time, if the pair that we're looking at is dollar CAD, it should be trading into support as well, and we should expect higher prices. So that's just kind of how you would do that. Okay, so I'm gonna remove this fib now because the only reason I wanted to show you guys that was so you could understand why this line is here, and also put it on your chart so you have it to refer back to during the week. But again, just to recap this before I move on from the dollar index, I want to see the market trade into 94.91 or 94.76, find support at those levels. Ideally, I want to see the bodies of the candles stay above the 50% level, which is 94.87. But again, keep in mind that we could have a wick that spikes down and hits 94.56, but that's the absolute lowest we can go. if the market on a daily basis closes below 94.56, then we have to assume they're going to trade lower. Okay, so bringing this all together, what does this mean? We don't do anything in the market until we get down to this level here, or this level here, and show us some signs of bullish price action, meaning higher highs and higher lows. If we get that, then we can step in and take a trade. Okay, but if the market is hanging around these levels and we just start, moving higher from here, then we have to wait for the market to get above here, and then we can look for a retest of structure or something like that. But where we're at in current price action, we have to wait for the market to trade down into these levels, show us bullish price action, and then that's the opportunity that we'll act on. All right, so with all that being said, we're now going to move over to Eurodollar, and for this we will start with the daily chart as well. Actually, we'll go ahead and we'll start with a weekly with all of them, just so we can really frame the whole weekly perspective of the things that we're looking at. So just keep in mind, as we go into a new week, it's good to, I typically stick to a daily, but working with these weekly charts when you start a new week is always good, because you can look at what did the previous week do and forecast what the upcoming week could potentially do. So for example, last week, here on Eurodollar, this is a weekly time frame. Again, we had a bearish week, so very small body candles in here, very small, very small, very small, small body, and then last week it looks like we're starting to break down, right? So if the market forms a candle like this, and it's signaling to us that okay, there's some level of selling coming into this marketplace. How low could they go? Where are they targeting? Where is the liquidity, basically? So we have these equal lows here that comes in at 1.1510, so 1.1510. So we've been talking about the 1.15 big figure, which is just 1.1500, but 1.1510 to 1.1500, that 10 pip range is where we would expect the market to target next. So that's about 50 or so pips from where we're at now. And if the market continues below there, so we get continued expansion, then I think our next level to target would be this series of down candles here, which is an ICT bullish order block on the weekly basis. And I have what level is this that I have marked out? The 1.1284 level. So 1.1284 is the level I have marked out on a weekly basis for Eurodollar that we could target next if we get below these equal lows and we continue expanding lower. Now I want to go move to the daily chart now, so you can see that I have this area highlighted here, the 1.1510. we got the equal lows, this low here, so there's a lot of liquidity built up below here. But what we also have to look at now is look at all these wicks that we've gotten here. We've got a lot of liquidity that's built up above this market now. So, one of the ideas that I have is this market could come take out the liquidity below these equal lows, and then so we could just have like a long wick or something that forms, takes out the liquidity below these equal lows, and then it starts rapidly trading higher for the liquidity above here. So that's kind of something that I have right now that I'm thinking about, because in my opinion, there's too much liquidity, I think, built up above here and these equal highs back here for them not to want to take this higher. So if they take it lower, I don't necessarily see right away that they're going to want to shoot for this 1.1285 level, unless they really start showing some strength below this 1.1510 level. But I just really think there's a lot of liquidity above here, so I'm a little skeptical right now with Eurodollar. So I'm probably going to be focused more on GBP USD, and we'll talk about that one in just a second. But In terms of euro dollar, I really want to see what happens once they get below these equal lows. So are they going to just run the liquidity and push it higher, or are they going to continue lower? Now, in terms of a tradable opportunity, if you look at these two up candles here, it's inverse to the dollar index. So we've got an ICT bearish order block, and the low of this candle comes in at 1.1620, and then the open comes in at 1.1642. So I have both of those levels marked out on my charts. And again, just like we did on dollar index, if you want to draw 50% of this out, like this, and put that level on your chart. This is like a rough drawing, but it's roughly 1.1673. So we might as well just put it on there since I've already done it, huh? Okay, so 1.1673, and I'll just edit that really quickly. Okay, and so now we got that on there as well, and we just need to make that red so it doesn't drive me crazy. Okay, so if the market comes up to these levels, we want to see some level of resistance form. So we want to see the market forming lower lows and lower highs. So now if you go back to what we were just talking about with dollar index, and we're expecting the market to trade down into that daily ICT bullish order block and show us some level of support, meaning we should see higher highs and higher lows forming on the like 1 hour or 15 minute time frame, for example. We should, the inverse of that, looking at euro dollar, we should see this market find some level of resistance here, here, or here. So bring all that into context, and then think about this. If we trade up into this level, that should provide resistance. If we trade up into this level, that should provide resistance. Now this is the furthest they can go, right? 1673, right? So if the market trades above and closes above 1673, where are they going to go after that? Here, because there's all this liquidity built above here. So this is the importance of marking out your higher time frame levels and then waiting for those levels to get hit. So again, we're not doing anything on euro dollar until the market does what? Until we get here, here, or here. Once we get to those levels, we need to see resistance forming. If there is no resistance forming and the market closes above the 1673 level, then we automatically have to switch our bias to assume that this market is going to trade higher for the 1750 liquidity, and then ultimately the 1840 liquidity built up above these equal highs here. Okay, so just to clear everything up so no one's confused, what I mean is I want to see the market push up, trade into one of these levels. So it could be this one, it could be this one, or it could be this one. We don't know which level it's going to be. It's just one of these levels. The market has to show us resistance. Lower lows, lower highs. Does not matter which one. We don't know which one it's going to be. We just have to have all of them on our charts, and then we wait until one of them gets traded into. Whichever one they show us resistance off of, that's the one that we'll trade off of. Okay? So whenever the market trades up into whatever level it decides to push up into, if we see resistance, then we can look for a sell and sell the market down into these equal lows. Once the market gets to 1.1510, we have to close out our whole position. So you can keep like 10% on, or a very small amount if you want to, but move your stop loss significantly in profit, and adjust all of that. Make sure you have no risk on the trade, because once we get below here, if we haven't cleared out the liquidity above here, I'm anticipating a potential sharp reversal. So what would that look like? Well, if the market pushes below here, what I'm expecting is something like this. Not a daily candle that would be this strong and come all the way up here, but over the course of 2 to 3 days, we could very well go from all the way down here to all the way above here. Now let me explain why that could be the case, right? So think about the people that bought the market and they have their stop losses below these equal lows. right? They placed their buy order wherever they did, and then they placed their stop loss below this low, and then once they seen that low be retested again as support, or quote unquote double bottom, whatever they call it, well, their stop loss is resting here because they trust that this would be strong support. It's a daily level, all that stuff, right? Now, their stop losses are there, and they also have those breakout traders. So think about, classic retail, who they'll place their sell stops below the market. So they'll have a sell stop below here, and what that'll do is whenever the market gets to this level, it'll place them in a sell order, and they expect the market to continue lower. Okay, so that's what whenever I'm saying a lot of liquidity, that's what I mean, right? We have to think completely opposite of what retail thinks. So retail is thinking, this is a double bottom, it's at strong support, it's going to continue, higher from here. They shouldn't take out these lows, but if they do take out these lows, then it's broke out, so it's going to continue lower, all that stuff. Now it could break out, retest, and continue lower. If that's the case, fine. We will be able to see that before it happens based off of the price action we have in the market. But at the current state of what I'm looking at in the market, this is a potential idea that I'm anticipating, because there's too much liquidity resting above this market for them to want to keep this in place, in my personal opinion. So if they do trade below here, think about it. They start pushing up, they find resistance at these levels, they trade lower, they take out anybody who was in a buy order, and they trigger new sell orders in the market. It would be the perfect time for them to reverse. They've cleared out anybody that's bought the market, so now they can put on their full positions, and then they can let the market push higher. And they've also trapped anyone who is a breakout trader who had a sell stop below this 1.1510 level. So now once they traded below and they triggered that sell stop and they reversed the price, all these people that entered the market way down here are stressed out because the market's pushing higher now, and they're thinking, oh, it's going to reverse, it'll come back, but then they take it all the way above this, all the way above these equal highs here, which they probably have their stop loss above because they're trusting it as a quadruple top, or whatever type of name they came up with for this. But this is where the liquidity is. Okay, the liquidity is here and the liquidity is here. So once they clear one side, where would be the next logical place for them to go? Clear the other side of the liquidity, right? So that's why I'm anticipating this as a potential idea. Again, it doesn't have to happen, but we have to have ideas like this because these are potential things that we could see unfold in the market. So I will actually go ahead and save this idea really quickly. Euro USD equal low reversal, bullish reversal, and long trend analysis, publish. Okay, so that's published now, and I can delete this. Alright, so that's I just wanted to save that for my record, so later on I can reference that if that scenario does unfold. But yeah, so that's what I'm anticipating. Now, if we're going to be a seller of this market, again, we have to wait for the market to get into one of these three levels here and show us some level of resistance. And if we get that, then we could definitely look for a selling opportunity if dollar index is trading into support at the same time. And then we'll look for this 1.1510 as a target. And if there is bullish price action that forms below here, we'll look for a buy-in opportunity. And we'll target this side. So that's pretty much how we'll play both sides of this. Now let's go ahead and we'll move over to GBP USD. We will start with a weekly just like we've been doing. And looking at last week's price action, we had a pretty big bearish week. We haven't quite taken out this low yet. So this low comes in at 29.57. So I have that marked out. That's the next level of liquidity that I think this pair will be seeking. So I also have this low of this candle here marked out, which comes in at 1.2773, and those two levels are the next targets in my opinion for this pair in particular. So I like this pair in terms of potential selling opportunity a little bit more than what we see in Eurodollar. And the reasoning behind that is if we go to a daily chart here, okay, so this low formed at this ICT bullish order block here, and we had a nice little reaction off of that, but ultimately we just traded back up into these up candles, which is an ICT bearish order block, and then we started to sell off. So since we've shown this weakness, I'm anticipating a further continuation below here. So, and also, you know, one of the scenarios could be, you know, just like Eurodollar, we push below here, trigger any sell stops, and clear out any buy orders, and then reverse it and go higher from there. That could definitely happen. Just based off what I see currently in the market and the structure that we see, like high, low, higher low, lower low, higher low, lower low, higher, like all this, like this structure right here, this formation of price, this just looks weak in my opinion. And if we get back above one of these levels, then we could switch our idea, which I'll talk about in just a second. But I am expecting lower prices on GBP USD at very minimum to get below this low here, and then a little bit longer term we're going to be looking for the liquidity below the 2770. What was this level? 2773. So in terms of a range, how far is that? Yeah, so that's about 200 pips from this daily low. So in terms of the trade setups or, you know, opportunities that I want to be looking at in terms, you know, of being a seller in this market, there's a few different opportunities that I see here. So number one, we could trade back up into this low here, which this is an up candle, a very small up candle, but nonetheless it is an up candle. This is an up candle as well. So I've marked out the two lows on these candles, which are, you know, ICT bearish order blocks on a daily basis. So and since, you know, we're using the wicks, I don't necessarily trust them to be, you know, as strong. But in terms of which level I like more, if you draw this level here over a little bit more to the left, notice how it pretty much aligns with this up candles open. So this is a few things right here. We've got these two up candles, which becomes an ICT bearish order block, not here because this down candle didn't close below here. But once this down candle closed below it, this series of up candles became an ICT bearish order block. Okay, so once that happened, any trade back up into this level will likely be the level that they're going to use, in my opinion. So I have this low marked out here, which comes in at 3082, because that is a level that they could, you know, they could hit, and that's the minimum target, right? That's the low end objective that they could trade up into. So I'm more likely to you know, trust this level here. But we're only talking about 10 pips away from each other, but I think if they're gonna trade up into these levels, this would be the level that they're going to use because it aligns with this open as well. I just think there's a lot more, this level would have a lot more strength in my opinion. So what level is this? It is 3095. So let's just make sure we have that marked out correctly on our charts. So 3095. Okay, perfect. So again, and if you look at the open of this candle, it comes in at 3095. So, you know, that's the low of this candle, and it's also the open of this candle. So there's a lot of confluence around this 3095 level that I think, you know, they'd like to capitalize on that. So again, we could see resistance form at this level here, but I'm more likely to expect a move into the 1.3095 level. Anticipate a level of resistance to come in there, and we could see, so we want to see bearish price action first on a lower time frame. So that would look like this. We would have a high, a low, then a lower high, and then we'd form a lower low. That would confirm that the market is forming bearish price action. So we have to wait for a high, a low, a lower high, a lower low. So you have to have like 2 smaller little swings first. So if you don't have that in your notes, make sure you put that in your notes, because that's important. You can initially sell as the market trades into it. That's going to come with a level of confidence and discipline that you have to have within your own trading. I can do that, and you can do that, but it again will all depend on who you are as a trader and how you trade specifically. So I like to wait for the confirmation, but that's me personally. You may operate a little bit different, but this is what I find works for me best. So once the market trades up into this level, I wait for it to trade away from it. So, and this is happening on a lower time frame. So, I may miss 5, 6, 7, 10 pips max, which I'm not worried about, because the move is usually 30 plus pips. So as the market trades up into that level of support or resistance, like whatever, in this scenario, we're looking for a selling opportunity, but it's inverse for buying opportunity. So, here we would be looking for a high, a low, a lower high, and then a lower low. Once this lower low forms, that's the trigger for us. That's saying, okay, now all we have to do is wait for the market to retest, and then we could sell it. Wait for the market to trade up into the low, an ICT bearish order block, one of the fib levels, like whatever it is that you use, that you see and works best for you, use that once this lower low is formed and you're anticipating that retest. Once you get that, sell it, and then you target this low. Okay, so if we mark that out in terms of how many pips that would be, say this was the exact price action that we got, that would be about 100 pips or so. So that'd be a nice little move for the week. And then we could close out our whole position here. We don't have to do anything else. And then we wait. Does the market continue lower? Does it reject and start trading higher? And then we can go in again, right? But that's why we have to exercise that patience. And that was the biggest lesson from last week of not trading is, we have to wait for the market to prove to us what they're going to do. Once we get that clarity from what they're going to do, then we can go in and, we can step in with a lot more confidence. So I'm going to delete all this off of here now. But, have these levels on your chart, especially the 1.3095 level, because that is, in my opinion, a significant level of resistance that I'm anticipating them to use. So, is there anything? No. Okay. I was just looking at a 4-hour time frame and seeing if there was anything I wanted to talk about on here, but it's pretty much all covered on the daily. So have all those levels marked on your charts, because those are going to be the levels I'm watching for the week. And now we'll look at dollar yen. So looking at this one, let's see, we'll actually use a little box and mark this out. So if we draw a little box around, so what I'm illustrating is this high, so this candle's high and this candle's low. Okay, so these two down candles are a daily ICT bullish order block once this candle closes above it. Not here. Once this candle closes above it, you can mark out this is an ICT bullish order block. So what does that mean? We don't expect price to go below this low. Now, do y'all remember the little trick that I taught you with the fib earlier today with dollar index? How ICT uses the mean threshold of the order blocks. 110.708. If we draw that level out, look at the bodies of the candles. Notice what happened with the bodies of the candles. If we make a copy of this, now I've got a line on the open of this candle. See how much significance the bodies of the candles have? So notice the wick, it does come down into this level here, which I'll make it a different thing so you can see it. So this level here is the mean threshold of this daily ICT bullish order block. So that's the furthest they could go. But if the body closes below there, then it's likely they're going to continue pushing lower. It would have to be a daily candle that closed below here. Notice what the daily candles did. They're just wicking, 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 wicking. But the bodies all respect the open of this daily ICT bullish order block. Okay? So that's important. Okay, so make sure that you guys, you know, this is how you want to mark up your charts, and these are the things you want to have on there. So I'm going to delete that box now. I just wanted to illustrate so you can actually see the order block itself. Now, marking these levels out, you can see the significance and the importance of the 50% level and also the body. Okay, so the market eventually did what? Small little body candles in here, respecting support, and then an explosive move away. Okay, so now let me just make these blue really quickly, and we'll just go ahead and keep these on the charts. Okay, now after this explosive move happened, what happened here? This down candle became an ICT bullish order block. So this may be a better way to highlight it. Okay, so a little hard, but this down candle here, once this big green bullish candle closed above this black down candle here, this candle became a valid ICT bullish order block on a daily basis. So it's now a daily support level. So I'm going to delete the circle now. The open of this candle comes in at 111.22. So I marked that level out on my charts, 111.22. And if we look at the close of last week, what does the close at? 111.22. So what does that tell us? Well, the market closed on Friday right at the ICT bullish order block open. So for the market open in a little bit, in a few hours at 2 p.m. Pacific Standard Time, this market could what? It could have a potential bullish reaction. So what would that look like? Well, it could gap up. It could start forming higher highs and higher lows off of this level, anything like that. But the key thing to take away from this is ICT bullish order block respected the open, respected the 50% level. Now we've got another one that's formed here, so we can anticipate the same thing to occur here. Okay, so we're going to mark out the 50% level of this one because at that point, that's the lowest they can go for us to basically say, okay, we're wrong if they go below here. All right, so the level comes in at 111.095. So 111.095. All right, and if you look at the low of the week, that came in at 111.10. So literally 0.05 of a pip off of the 50% of the ICT bullish order block here, the 50% level. So if we look at this on an hourly time frame, market trades right into it, pushes up. Okay. Now this bullish candle has closed above this down candle. So everything can be transposed to a lower time frame, right? Every tool and every technique applies to all the time frames, but you have to start with the higher one first to get your idea. So blue line we know is 50% of the daily order block. This we know is the open of the daily order block. On an hourly basis, we have a 1 hour down candle, then a bullish candle that closed above it, that this has just become a 1 hour ICT bullish order block, which is the same candle that formed the low almost right at the 50% of the daily level. And look at the price action we're getting, right? So as the market closed at the week, we reacted positively, we pushed higher off that level, and then we consolidated right on top of this ICT bullish order block on a 1 hour basis, but most importantly, the open of the daily ICT bullish order block, which is the blue line. Okay, so what does all this mean? Well, I'm anticipating a potential bullish week on USD JPY. All the reasons for that is everything that I just went over. We had down candles pushed up, traded down into it, respected 50%, bodies of the candles respected the open, then we formed another one here. Market closed right at the bullish order block open. The low pretty much came down to 50% and then pushed up, and then we closed right at the open of the bullish order block. After looking at it on a 1 hour, seeing this little piece of price action, you can dive in and look on a 15-minute. Look at what we're getting. Low, high, higher low, higher high, higher low. Well, this is actually a lower low, but it just cleared out short-term 15-minute stops, so you can't really count that. Look at the bodies of the candles. If you take off the wicks and just look at the bodies, we're still staying above these bodies, and then these bodies made another, they closed higher than these bodies. So we're forming, not perfect bullish price action, but we're forming, some level of bullish price action so far off of that level, and we're respecting the daily ICT bullish order block open. So we have to take all that stuff into account for when we're looking for our trade setup. So I will be looking at dollar yen this week. I think we could get a nice reaction off of this if they do in fact find support here. Now let's talk about where they could go, right? What are the levels that they could target? Well, number one, we have this high here, which comes in at 112.15. Okay, so that's a daily level, daily old high. So basically old resistance, right? Now, once the market gets above that, think about what would be happening. Okay, so say we get bullish price action, we start trading up from here, okay, like we expect. Now, once the market gets above here, what is that? Old resistance broken now becomes what? Support. So I want you guys to think about this now. We have a series of down candles, 3 down candles. Say we get 1, 2, 3, however many bullish candles, but they close above these 3 down candles. Then these 3 down candles become what? Another daily ICT bullish order block. And this would be the high of that candle, of the daily ICT bullish order block. So this is kind of how you can anticipate and getting in before or as the order block is forming. So this down move, trading into this down candle, should act as support. So if we bought it here and the market starts trading higher, well, then we can add another position once we get above this level, because this should be another ICT bullish order block. Or for the people that missed it, say they missed it here, wait for it to get above here and then buy it once it retests it. Okay, so it's the same concept whenever this down candle, so if you think about it this way, it's the same concept whenever these candles here are down candles trading into this ICT bullish order block, right? So as this is a down candle, trading into another down candle, which is an old ICT bullish order block because this candle closed above it. So we would expect support to come in. So this down candle, if another bullish candle gets above it, should be what? An ICT bullish order block, right? So if we play it, why is this? Okay. So see, then we got the bullish move, which did what? Confirm this as an ICT bullish order block. So all we're doing is we're looking for the same thing to happen here. These three down candles will then become an ICT bullish order block. Once we have an up candle like this that closes above them, just like it did here and just like it did here for this. Okay? So early in the week, I'm expecting a potential buying scenario on dollar yen. So Monday, Tuesday, keep a lookout in the Telegram signal group for the signal to come through in the premium signal group. So if we look at a 4-hour, I wanted to talk about one more thing here. If we take our fib and we have this low to this high here, which this is the swing that broke structure, breaking above this consolidation, these old highs. So it doesn't really matter. We can use this low here, or we can use this low, which would be the full swing itself. Both will give us an accurate, roundabout levels that we'd be anticipating for the market to find support at. So we'll use both levels, and I'll show you what we get for both. So if we draw the low from this low, draw the fib from this low to this high, we have the 61.8, the 70.5, and the 79% retracement level. Notice how the 70.5 and the 61.8 are both resting right above the 50% level of that daily ICT bullish order block, which is this 111.09 level that we're looking at here. So basically, what does all this mean? Well, we have the 79% retracement level, which is only a few pips below it, 5 pips below the actual 50% level itself on the from the daily mean threshold of the order block. So we anticipate the market to have some sort of bullish reaction in general between 61.8 and 79%, as long as there's been a break in market structure. Okay, which we have had here on a 4-hour basis. So this is just a kind of like another tool or another thing that I bring in after I've marked out my higher time frame level. So I'm already anticipating bullish price action, but now I've added this fib on here on this swing that broke market structure, and I've also noticed that we've got the 61.8 to 79% retracement level lining up right around the daily ICT bullish order block open, as well as the 50% level, all in between there. Now, for example, say, just hypothetically speaking, say this was the range that we were looking at from this low to this high, and we had the 50% level, that was lower than the 79% retracement level. Well, then it's more sketchy, right? There's not a lot of there's not a lot of confluence around that specific level, versus when we have it on the actual low, it's like everything's lining up, right? It's all right in the same area. So that has to mean something, right? There has to be some level of support. And if there isn't, fine. The market breaks below this low, and then we just sell the retest of that structure. Okay, but we have to work off of the higher time frame, and this is all based off the higher time frame. Looking at the daily, we've already reacted off of this ICT bullish order block, traded up. Then we formed this one here. We're trading into it now, and we're anticipating a potential run higher, breaking this high, which would validate these 3 down candles as an ICT bullish order block. So when we're looking on these 4-hour these 4-hour time frames like this, and we draw our fib from the low to the high, and we also see that the optimal trade entry levels are lining up with these daily levels, well, then we have just more than one thing that's lining up to validate our idea. So now we'll use this low here to the high, and again you could see that we've got the 61.8 and the 70.5, and we've got that 50% of the ICT daily ICT bullish order block resting right in between those levels. So it's not like it perfectly lines up with the level or anything like that, but we just have to anticipate potential support because these things are near each other. So sometimes you'll get it, and you'll see 70.5 just like this. It'll line up exactly with the equilibrium, and if you get stuff like that, then you can have a lot more confidence in the actual trade itself, right? So we just use the wicks. Now, for example, if we use the bodies, you actually see that happen here, right? So using the body's close here of this candle and the body's close here of this candle, which instead of using the wicks, we're just using the bodies. So sometimes you have to use the wicks, sometimes you have to use the bodies. You just have to see which ones line up the clearest. Okay, so using the body here and the body here, you can see that what happens now. That 50% daily level lines up with what? The 70.5 optimal trade entry level, as well as, what is this down candle? This is a 4-hour ICT bullish order block, right? So now we got to think. We've got a daily ICT bullish order block that we're within. We've got optimal trade entry lining up with the 50% level of the daily ICT bullish order block, and we've got a 4-hour ICT bullish order block right at that same level. So 111.10 for dollar yen should be a pretty significant level, right? So we should see some level of support form around there, and that's kind of the reasoning behind that. And again, if that doesn't happen, no problem. We're wrong, and that happens sometimes. But if we get below here, if we get below this low, at that point we'll just be able to sell the retest there and look for a continuation lower. Okay? But we have to focus on where we're at right now in current price action, and this is what we're within. So these are the ideas that we have to build around the market. Okay, and already expecting higher dollar index, we match all that up with this. It's lining up, right? We're seeing multiple things line up. So yeah, I think that is everything. Yeah, it was just the 4-hour and the daily that I wanted to talk about for this. But yeah, so the levels that we're going to be targeting, I briefly went over those. The first target we're going to be looking for is 112.15, which is going to be this daily high here, and then the next target we'll be looking for is the bodies of these candles, which will just be like like target 1, target 2, target 3 type thing. And this level comes in at 112.87, and then we've got this high back here that comes in at 113.17. So those are going to be our targets in terms of like the upside objective. Now again, if we miss the move here or whatever, and the market just starts rapidly trading above here, we'll be able to don't stress out or anything. We'll be able to add another position once we get down and retest this, because this would validate these down candles as an ICT bullish order block. So at that point we would have missed take profit 1, no problem. We still have take profit 2 and take profit 3, and then we'll just be able to get on board from there. Okay, so in terms of range from current price to take profit 1, 92 pips, take profit 2, 163 pips, take profit 3, about 195 pips. Now, like I said, if you miss the entry opportunity here, and you get back, you get your position on once we get back above these candles, then your first take profit would be 71 pips and second take profit would be 100 pips. So either way, you're still getting a significant amount of pips in my opinion. So one of those two scenarios, whichever one unfolds, if you miss this one, grab that one and go from there. But yeah, that's pretty much it for the weekly analysis portion. I'm going to go ahead and stop the recording, and I'll answer any questions if you guys have any.